Good morning, everyone. My name is Mark Chasmin. I'm Director of Investor Relations of Nouveau Monde Graphite. I'm pleased to welcome you today to the call highlighting the results of the feasibility study for our integrated ore-to-anode material model project. During this call, we will discuss our business outlook and make forward-looking statements. Any such forward-looking statements are pursuant to and within the meaning of the safe harbor provisions of applicable securities laws. These comments are based on current expectations of management regarding future events and operating performance, and there are no guarantees of future performance or results. All forward-looking statements are subject to risks and uncertainties that could cause actual results to differ materially, and these risks are discussed in our continuous disclosure documents filed in compliance with applicable securities laws, and it is the responsibility of each and every investor to be aware of them. Before I turn the conference to Eric, take note that although we will be taking questions from the public in general, that the priority will be given to sell-side analysts. It is only once their questions are answered that we will accept those of others. For media inquiries, we would invite you to contact Julie Paquet, VP of ESG and Communications, after the call. To analysts, we ask you that to ask a question, you do it in the provided Q&A box at the bottom of the screen. À tous nos auditeurs francophones, merci de votre présence. Un petit mot pour vous rappeler que la présentation d'aujourd'hui sera en anglais, bien que nous prendrons les questions en français et en anglais. Cependant, la priorité sera accordée aux analystes financiers et ce n'est qu'après que leurs questions soient répondues que nous répondrons à celles du grand public. Je vous remercie. Je passe la parole à Eric. Eric?
Merci, Marc. Welcome, everyone. So very happy, all the team here is very happy to introduce you today the feasibility study that we've worked. Before we do so it will be in 3 steps. First steps, the operation team will introduce the study itself and the results. Secondly, the market perspective. And third, the financial model confirming that this is a very viable project in terms of economics. So the team worked extremely hard on this project. Some of them, like the operation team, Bernard Perron, our CEO, Alain Mercier is working with the company since 2016, Alain already. So working on this specific project since 6 years now. Antoine Cloutier, our chief geologist, since 10 years, working in the company and he discovered a Matawinie project. So they will talk to you about the operations. Patrice will handle the market perspective. Charles Olivier Tarte, our CFO, will be there as well for the financials. So first of all, our project location. So the location is very important in our project. We're located for the mine itself, the Matawinie project, 2 hours north of Montreal, and for the Bécancour battery material plant project, 2 hours northeast of Montreal in a large industrial complex. Being located in Quebec is big advantages. First of all, access to clean hydroelectricity and all needed infrastructure, access to skilled labor and highly specialized R&D facilities, and also a very supportive government that is also a shareholder, but also supportive in bringing all the market participants in the province. So great location in terms of doorstep to customers as well, where really can provide easy logistics and just on time delivery to customers. So this is something that is very appreciated. By owning the full vertical from mine to market to the cell maker, we can control our costs, not only in terms of pricing, but also in terms of long-term stability of cost structure. Also, just-in-time delivery is very important, easy logistics, security of supply. So by having a meaningful scale like that available on the North American continent, that makes Nouveau Monde Graphite very attractive. And to do so also, we're working in a phased approach. As you know, we have already invested over $100 million in our project, most of it to build a phase one capacity. So all the work that you'll see today on the phase 2 itself, design, is based on experience at operating those plants, and in our team as well, operating other plants in the world. So we are now in the full mode of operation, going all the way from concentration at Matawinie, all the way to doing the coating and enhancing the value of the product, but also making this product available on the North American continent. So this is a big advantage that we have. So our phased approach. So first of all, this phase one is allowing us to de-risk significantly the project since 2017. Now what we're talking in this feasibility study is the phase two. So the phase two goal is to deliver profitability by 2025 by building those two projects that we'll talk about today. And then the phase three is the growth, it's the vision. It is, amongst other things, the LITHIUM agreement with Mason Graphite that is ongoing. So without further ado, I would like to introduce you Bernard Perron, our COO, along with Alain Mercier and Antoine Cloutier will take care of the operation team.
Thank you very much, Eric. So over the next few slides, we'll be talking to you about the objective and the content of our feasibility study and the project in general. So I'll actually pass it on immediately to my colleague, Alain Mercier, who had the pleasure to oversee the development of the study. So go ahead, Alain.
Yes, good morning, everyone. So the feasibility study for the integrated ore to battery material project was performed by the Canadian firm engineering BBA. BBA acted as a lead engineering and responsible qualified person for the NI 43-101. The FS was carried out from June 2021 to this date. The mandate consisted of developing all technical deliverables and CapEx, OPEX estimate for the Bécancour plant, reviewing, updating the Matawinie plans, CapEx and OPEX estimate, and finally approving the financial model for the integrated ore to battery material project. On the next slide, you'll see that the Matawinie mine concentrator will produce about 100,000 tons per year, and about 60% of that material will be sent to Bécancour, where most of the graphite will be transformed to anode material. The remaining graphite from Matawinie will be sold as graphite flakes.
Yep. So, thanks, Alain. Good morning to all. It's a pleasure to briefly present the culmination of all the exploration work done to date on the Matawinie graphite project. So the company has moved at a very rapid pace since it first set foot on the property in June of 2014. Exploration work, including airborne geophysics, ground geophysics, trenching, drilling, resulted in the discovery of multiple mineralized zones. To date, we've got over 32 kilometers of drilling, and we also, including 27 kilometers on the west zone. Metallurgical tests returned excellent results, with close to 50% graphite flakes falling into the plus 80 mesh size fraction, with a sustained purity of around 97%, sometimes even reaching up to 99%. And that's by using a simple flotation process as well. So all of this work eventually led to the reserve estimate that we're publishing today. Although we have focused only on the 3 kilometer long west mineralized zone, it's important to note that we still have 9 linear kilometers of potential, as demonstrated by the results over the main circular anomaly hosting the proposed mine. Our focus in the last couple of years concerning the proposed open pit has been to de-risk the mine plan with an extensive campaign aimed at upgrading the pit design and providing additional pit slope stability data. So here we see the resource update. It has slightly grown since the last reports. This is mostly due to the extension of the company's claims along a power line corridor in an area where staking was previously prohibited. Measured and indicated resources now total about 5.6 million tons, sorry, of graphite using a cutoff grade of 1.78, which is the same cutoff grade used in previous studies. And finally, ultimately, after all this work, the new mineral reserves of the planned open pit are very similar to those that were presented during the 2018 feasibility study. So they're estimated at 2.6 million tons of graphite using a cutoff grade of 2.2%. Again, same cutoff grade as the previous study. So the proposed open pit has a strip ratio of 1.16 to 1. And these results, coupled with various economic parameters, support a 25-year mine life. One of the significant aspects of our deposit is that the mineralization is very homogeneous. We've done quite a bit of variability testing. Over hundreds of core subsamples were tested and demonstrated that the flake size distribution and concentrate purity show very similar results throughout the deposit. So this aspect, which is provided basically by nature and geological environment, facilitated the optimization of the mining operations. So as presented on this slide, the mining operation are very well balanced and assure a stable supply of graphite concentrate of equal quality throughout the whole life of mine. So throughout the whole 25 years, pretty much the same material coming out of the mine. Our ore processing facility is expected to produce about 103 kilotons of concentrate annually, with a recovery rate of 93%. So my colleague Bernard will pursue with more detailed information about the mine site layout and the future construction. Thanks.
Thanks a lot. So on this slide, what you can see here is a planned view of our mine on its 4th year of operations. The heart of the mine is the longer gray shape that you see there from top to bottom. On the top left in brown is our innovative dry stack co-disposal system that's purposely designed to avoid any acid drainage. In white in the middle is the industrial platform where the concentrator is located. And in blue, it's a little bit hard to see, but in blue around the various stockpiles in downstream locations are several catch basins that form a belt around our site to ensure maximum environmental protection and are part of an optimized site water management system to promote water recycling in support of the operation process. Moving on to the next image, you can see this is a various renderings with the concentrator building on the top right and our industrial platform on the bottom left. On the next slide, this is a view inside the concentrator, inside the concentrator with various pieces of equipment, including mills, magnetic separators, and the floating cells. And the next rendering shows our industrial platform next to the mine pit, which, by the way, will be the very first to gradually be operated using Caterpillar's fleet of electric mining equipment currently under development, which will be part of our zero emission solution for the Matawinie mine. And on the right of the concentrator is one of those water catch basins for environmental protection I was just talking about. So in terms of status for the mine, where are we at? So I'm glad to inform you that the engineering is approximately 60% complete. It has been supported in terms of engineering from all of our major suppliers. And the summer has a sizable environmental protection infrastructure program. The upcoming activities for Matawinie will include continuing the detailed engineering, but also ordering of the long lead equipment and complete assembly of our execution team. We're well on our way on that, but we need to hire several more people and start the civil work, which is part of the next step. So the last slide on the Matawinie site, what you can see there is a snapshot of the work underway, including the 8-kilometer access road, which is now near complete and is being finalized, and the location of the main environmental protection infrastructure. So that's it for Matawinie, and now we're going to move on to the battery material plant. You can see a view here of the state-of-the-art phase 2 facility that will produce the 42 tons per annum of anode material. That plant is strategically located in the heart of the industrial battery hub of Bécancour. It's nearby ports and railway and surrounded by all the suppliers required for our advanced process. And now I'll pass it on back to Alain for further details on the Bécancour plant.
Thank you, Bernard. So as we see on this simplified process flow sheet, the Bécancour plant consists of 3 main process areas. The shaping area is a mechanical process to achieve the desired particle size and shape, 20 micron and 10 micron. Multiple lines are required to achieve the capacity. In the purification area, the remaining impurities in the graphite concentrate will be removed to achieve battery purity requirements of 99.95. The current mass balance and Nouveau Monde's objective is to achieve the capacity with 9 furnaces. The tests are being performed at Nouveau Monde's purification demo plant to confirm the number of furnaces. A project risk reserve was developed during the course of the feasibility study with BBA using a Monte Carlo analysis. And the risk reserve includes the risk of requiring more furnaces to achieve the capacity. Finally, the coating process area consists of 6 kilns, which serves to create a nanofilm of carbon on top of the particle. And these kilns are off-the-shelf commercial available unit. On the next slide, you'll see a rendering of the Bécancour plant. The plant is a compact design. It's located on the northwest side of a 200,000 square meter land, and phase 2 will use only 50% of the available real estate.
So in terms of current status in Bécancour, we're completing our preliminary engineering and selection of our major equipment. All throughout the summer, we'll be optimizing our process design with the help of our phase 1 demonstration plant, including the purification process to confirm the number of furnaces required and some other aspects of the process. And then we'll definitely be in a position to commence our detailed engineering very shortly. So that's my update. I'll now pass it on to my colleague, Patrice Bélanger, who will be providing us with a market perspective for our anode material. Thank you.
Hello, everyone. So now the exciting part starts. As you can all witness, the lithium-ion battery market is in an exponential growth these days throughout the world, not only in China, which was really the precursor of that trend, but now more and more we see announcements being made in North America and Europe, where these 2 markets are key for Nouveau Monde's further development. So as you can imagine, we have already started discussion with the majority of the tier 1 into this market, but we're also considering certain tier 2, which we see that have the highest potential to materialize their plan and their growth plan. We have also recently received, I would say over the last year, specs which those suppliers are using, but also future specs, which means the next generation and the direction where they want to go, so that we can prepare ourselves from a production point of view to what their demand will be in 25, 26 and beyond. So this is really important for us to really put on the ground assets that are fulfilling future needs of those players as the technology evolves with time. From a market point of view, it is clear that already from 2026, there will be a deficit in the market for the entire graphite market, being natural and synthetic together. We're always considering a blended market of roughly 50% synthetic, 50% natural. And this is really comforted by all the discussions we have with EV manufacturers, but also LIB manufacturers. Benchmark Minerals, which is supporting us with really independent forecast views of the market, is also in the same ballpark figure. So this is how we see the market evolving so that it can be secured not only from one graphite source, but from two different graphite sources. The demand is increasing not only in Europe, but also in North America. Consequently, there will be a shortage of suppliers. And as you can imagine, it takes roughly 10 years to put a new mining project into operation to deliver an in-spec product. So we believe that right now we will be, as soon as we start production, the largest fully integrated supplier in North America. And with our expansion plan, we will continue to maintain that position. This is really what large customers are seeking because they want to make sure that there is suppliers that will follow their growth mode through the time. At the end of this decade, towards 2030, there is an expected deficit of 2 million tons. So although we have aggressive growth plans, it's becoming clearer and clearer that graphite will be in deficit in the EV market, and people need to put strategies in place to fulfill this. And this is why we believe that Nouveau Monde is properly positioned to really meet that demand. And really looking at the current trends starting last fall, we can see now that on a global basis, the price of graphite flakes is increasing because the market is getting tighter and tighter. And as those EV plants and LIB plants will be put on stream in 2025, 2026, that's really where there will be an obvious deficit of graphite into those markets. From a pricing point of view, again, Benchmark has supported us with forward-looking on pricing index. So here you can see the detail of what it's seen as an average for the life of mine, so for the entire duration. Some of the markets are growing more rapidly at the first phase of the mine and then stabilize through times. But this is really to offer you some guidance as far as where prices will be going in the future. Keep in mind that already we have factored in for North American customers advantage of logistic costs for Nouveau Monde, some advantages regarding the CO2 footprint that Nouveau Monde will be offering, which is the lowest among all natural graphite suppliers, and also some tariffs that will be that are currently in place, but not necessarily enforced on current consumers. But all of this has been considered, and this is why we see that Nouveau Monde's project will likely be highly profitable through times, because we believe that the demand for graphite will continue, and this will have a positive impact on our performance. So on this, I just want to show you also from a product point of view, development point of view, we have already provided from our demonstration units many A samples for the different OEMs or different battery manufacturers. We are also currently entering a B sample phase with one of the key suppliers that we have in our portfolio. This could lead into a conditional offtake agreement, which is conditional to the financing of our project. So this is where Nouveau Monde's marketing team is focusing on, not only with one, but with a few different customers at the same time. And that will be really triggering the financing and the phase 2 construction of our project. At a later point, starting early next year, we're going to really start solidifying offtake agreements and enter into C samples. So for those of you who are familiar with the industry, it could take up to a year to really qualify our product with large scale samples up to 80 metric tons, sorry. And this is really what the market is looking for. So because Nouveau Monde has developed large demonstration units plants, we can qualify our product with our demonstration unit, which helps us to really speed the qualification of our process for our commercial plant. So on this, I'd like to pass it along to our CFO for the financial figures.
Thank you, Patrice, and hi, everyone. Let me open by saying that I'm very pleased with the robust feasibility study we released this morning. Today, I'll be presenting some of the financial highlights of our integrated phase 2 ore-to-anode material business plan. Note that all figures presented in this financial section are in constant 2022 Canadian dollar. First, the initial capital cost for the Matawinie mine is expected to be $481 million. The estimate is a class 2.5 feasibility estimate with an accuracy of -10 plus 15%. For the Bécancour plant, the initial capital cost is expected to be $923 million. The estimate is a class 3 feasibility estimate with an accuracy of -15 plus 20%. Both projects combined forecast a capital cost of $1.4 billion. Note that those estimates have been prepared as of late May and early June 2022. Solely since the beginning of the year, we estimate the inflation impact to be approximately $135 million or 10% of the capital cost estimate. The inflation is being felt across the cost base in equipment, material, concrete, labor, amongst others. Moving to the OPEX cost, the Matawinie mine is estimated at $565 per ton of natural flake graphite. This represents an increase of 13% over the previous feasibility published 4 years ago. As for the Bécancour OPEX, we estimate the cost per ton to be $2,250 per ton of feed or $3,200 per ton of anode material. Those figures exclude the raw material costs coming from the Matawinie mine. Thanks to the great location of both the Matawinie mine and Bécancour plant, we expect easy logistic in and out. We also have access to skilled labor and affordable hydroelectricity. The strategy of developing a turnkey natural graphite operation with competitive advantages shall enable NMG to be well positioned in the marketplace, aiming to capture the tremendous growth the sector is facing. Going into the summary of economic highlights, the CapEx, OPEX, and the sales assumption presented earlier translate into strong project economics for both the Matawinie mine and the Bécancour plant. From a return perspective, we expect a 21% after-tax internal rate of return. We are also seeing a balanced return if we're looking at both assets independently, with the Matawinie mine at 22% after-tax IRR and the Bécancour site at 20% after-tax IRR. Looking to other metrics, the integrated project expect an after-tax NPV at 8% of $1.6 billion and also deliver an average of $300 million of EBITDA once at steady state. Looking at the sensitivity analysis, the sales price is the most sensitive variable, followed by the OPEX and the CapEx. On the right-hand chart, you can see that a decrease of the sales price by 30% would still provide a double-digit IRR. On the other hand, shall the sales price increase in the coming years, this would greatly increase the return. Finally, an increase of 30% of the CapEx or OPEX would still provide an IRR greater than 15%. This concludes the management presentation. I would like to remind you that the investor relations team is available following the call in the coming days to answer any question you may have. With that, I'll turn it to Julie Paquet, Vice President, Communication and ESG Strategy, to begin the Q&A session.
Thanks, Charles. So again, you can submit your questions in the Q&A box at the bottom of the screen. Pour les participants francophones, vous pouvez soumettre les questions en français, on répondra dans la langue de la question. So we'll get started. We have a question by Robin Fiedler, analyst at BMO, Eric, regarding the update on the potential mix of spherical purified graphite versus coated spherical purified graphite. What are the outlooks might be on that end?
Yes, indeed, very appropriate question. So we are in this feasibility study. The scope is ready to produce 100% coated spherical graphite, some bigger particle and smaller particles. That's the scope of the feasibility study. As you all know, we are negotiating with large customers, and depending on the specification of their particle size, and also should they require coated or not coated, we will update the feasibility study accordingly once we have completed such an agreement. But we always keep in mind to maintain same return and have a very good deal with the customer. Once we have finalized that deal, we will be public about it.
Great. We have two questions regarding phase one, so I'll merge them together. So phase one, is it finished? what are the potential economic value that we could pull out of that operation, and any specific revenues that we may forecast in that regard?
Yeah, so the phase one is completed. Construction is completed. We are operational at the phase one. The coating line is still being commissioned, but will be operational in the upcoming weeks. The goal of the phase one is not to generate profit. It's not to generate revenue. We are not making any forecasts in that matter. It's really to support the qualification of our product. By operating a large nameplate capacity, we can be confident in the quality of the product that will be identical to what we will be producing in the phase two, and also to support the engineering of the phase two. So we are not making any forecasts in terms of revenue from the phase one.
Great. Another question here from Robin regarding CapEx on equipment specifically, so perhaps for Charles. When were the estimates based on, and what's the status in terms of long lead items that need to be ordered for CapEx requirements?
So as far as the capital cost estimate, we have more than 95% of the equipment prices, which have been gathered directly from the supplier we intend to use. As far as long lead items, we're seeing pressure in terms of the logistic delays and also the procurement delays on some of those items. So we are monitoring the situation, and we might order some long lead items earlier on, or start the engineering, which we already start with some of the key OEMs we intend to use.
All right. Another question from an analyst, Joseph Rieger, in regard to the construction timeline, when do we expect to have a final investment decision? And what's the sequence between the mine and the battery material facility? Could there be delays in that regard?
I would like Bernard to open his camera and take this one. However, I can start answering it. We expect the final investment decision on the project to be around Christmas, most probably in Q1 next year. And it all depends. We need to align a lot of different things. The offtake agreement that will support the project financing, and advancing all the lending discussion with bankers, alongside as well having a final schedule and advancing the engineering. And on the schedule and engineering, I will let Bernard, our CEO, answer.
Yes, building on that answer, that would lead us to start construction in the spring. So we, as I mentioned, we're 60% engineering complete at the mine. So we're really ready to start the civil work, the underground, and the concrete over next summer under that scenario. And as far as Bécancour, the early works, civil work would also start in the spring next year, which would be great because it would allow us to get a bit of a head start on the other projects that are announced in the area. So, so that's the plan for now.
Thank you. Continuing with Joseph, so what's the average annual sustaining capital for each of the mine and the battery material facility?
So on the sustaining capital cost, the assumption that we have around the mine is throughout life of mine around 60 million Canadian of sustaining capital costs, mostly related to the increased footprint at the mine, where we'll need to manage more water and more of the tailing storage facility. On the other end, we have not baked in any sustaining capital in Bécancour, and we assume all all that cost being part of the maintenance of the facility, and not increasing the useful life of this facility, which is expected to be 25 years.
All right, moving on to process. We have a question regarding the yield for the battery material plant. So we have a feasibility study with 70% yield compared to industry average at 40 to 50%. So what's our conviction of achieving that yield?
Yeah, on yield, there's different technologies that exist on the planet. There's, I know 3 of them. The 2 big ones are continuous process, the one that is mainly used in China, that probably come, with the lower yield, 30 to 40% industry average using the continuous process. We have a batch process that we are operating since early 2020, and we are confirming those yields that we see in the feasibility study are supported by the phase one that we are having with our own batch process technologies that we have modified and operated, and we have all the statistics to back these numbers. So we're highly confident in those numbers.
Thank you. Two questions regarding the sales component of the project, so I'll merge them together. What's the status, if we can get a recap in terms of A, B, C sampling with the qualification of our product with potential clients, and is an offtake agreement required to proceed to phase two?
I can confirm an offtake agreement will be required to build a healthy project financing with lenders with senior debt. So we want to have an offtake agreement for some portion. We need an anchor customer. We are advanced in negotiating with some of them. We cannot obviously go more in detail about it, but maybe I will let Patrice talk about the qualification process that is ongoing with most of them, even though the discussion on commercial and anchor customer is different. We are progressing with the sampling with them.
Yeah, thanks, Eric. So as mentioned before, we have entered into A samples with the majority of our customers from whom we've received specs. So this is ongoing with our large demonstration units that we have for each process steps, and very soon also with the coating line. So until now, we've relied on the equipment of our equipment provider to do the coating testing. But now we're entering into the second phase. So at least with one of the tier one customers that we have in our portfolio, they have an interest into a B sample. So this is what we have started producing large scale. And by the time we have the product ready, our coating line will be ready. So we will be able to qualify the entire value chain with our own flakes and with our own demonstration units. So that is also a credential that OEMs are looking for, because they want to make sure the product we're providing them now is really mimicking what we're going to be doing at commercial level.
All right, thank you. Now a question on the timeline for the phase two of the project. Perhaps Eric or Bernard?
But if it's all about if we need an offtake agreement first, then we can proceed with discussions with lender and proceed with a final investment decision in Q1 next year. And if we have all the money needed in Q1 next year, the construction timeline in the feasibility study won't show dates. It will show T plus certain amount of months. So the operation team will require, and I would like to hear Bernard about it, at least 30 months we have in the feasibility study to build the project.
Yep, that's exactly what we have.
All right, thank you. Now, in regards to the other zones of the deposit that have potential, a question regarding the process for permitting, was it started? What's the status on that?
Sorry, Julie, can you ask again?
Sorry. So for the other zones of the Matawinie deposits, those that have potentials but are not included in the feasibility study, have we started the permitting process?
At this point in time, we don't intend to permit any more capacity on Matawinie project. So it's a discussion around phase 3, I would say. And now we're in discussion, as you all know, it's public, with Mason Graphite, and we are expecting to close the transaction in the upcoming months. And that's really the expansion that we are thinking about now. After the phase 2 that we've discussed today, it won't be developing ancillary deposits around the Matawinie project. It would most probably be Lac-Guéret development in the upcoming years.
So in that regard, could you cover what are the next steps in terms of potentially developing the Lac-Guéret deposit?
Next steps is to make sure Mason's shareholder vote in favor of the transaction on 14th of July AGM. I encourage you, if you own share of Mason, to vote in favor of the transaction so we can proceed after that to the closing of the transaction. And we're expecting to deliver a PEA, Preliminary Economic Assessment 43-101, in the first half of 2023, where we will do the first design, the first work on the project. In the meantime, we will process the ore of the Lac Guéret within our phase 1, and we will start to work on the permitting of that project. And the idea would be to have a final investment decision right after we finish construction of the phase 2. So in 2025, we can start construction on that project. So we are starting to think about the phase 3 because our development team now is available now that we are in construction mode on the phase 2. And also based on the discussion with customer, it's clear that they will need much more product than what we can provide out of our phase 2. So we need to be the first mover and work hard today if we want to have a project ready in 2028, you know. So that's really the idea of the phase 3.
Thank you. Now, a question regarding byproduct fines that are generated out of the battery material plant. The question is whether revenue for this byproduct is included in the economic analysis.
So what we've assumed in the economic analysis is a revenue of $500 per ton for byproduct, which is roughly $9 million of EBITDA contribution. So that's around 3% of the EBITDA we expect coming from the byproduct. And based on market study that we've seen, we use a conservative assumption on that pricing.
I think we've covered all of the questions for now. I might leave it open another 2 or 3 minutes if people have additional questions. If not, I'll remind people that Marc Jasmin, Director of Investor Relations, will be available to follow up on any questions you may still have. I can manage media requests if need be, and the recording of the session will be made available via our YouTube channel following the event.
World class. So thank you everyone, and the NMG team member work hard on that feasibility study. Thank you all shareholders to support us. And we're looking forward to continuing this journey all together. Very exciting time for all of us. Cheers.
Thanks, everyone.
Oh, 2 more questions. I generated a question. Okay, sorry about that.
So it's okay. So a question for Bernard regarding the nature of construction currently happening at the mine site.
Yeah, absolutely. So right now what we're doing, we're focusing on the environmental protection measures that are required. And we're completing the 8-kilometer access road that was mainly built last summer. So between those 2 activities, we want to be absolutely sure that our site is well protected from an environmental perspective. And that's the main focus for this summer.
Great. Question on electrification in French. Est-ce que l'électrification des camions est complétée, fonctionnelle et éprouvée?
Alors, en ce moment, nous avons reçu sur le site un véhicule pilote qui est un camion électrique et on travaille en partenariat avec la société Caterpillar au cours des prochaines années pour les aider à développer leur flotte d'équipements électriques. Alors, tranquillement, les équipements électriques vont commencer à arriver sur site à partir de 2023 et on va pouvoir développer comme ça l'électrification avec l'objectif d'avoir une flotte complète lors de la 5e année d'opération. Alors, c'est notre objectif pour l'instant et ça se déroule très, très bien.
Quick recap in English, perhaps?
Yeah, for sure. So we have on site right now a vehicle that is an electric truck. It's an experimental vehicle, and the we're currently working with the Caterpillar in order to help them develop their electric fleet of mining vehicles. And bit by bit, those vehicles will start arriving on site as of 2023, and with the objective to be fully electrified in the first few years of operations.
Okay, thank you. Is there graphite coming out of the mine now? What's the status in terms of production?
As I've mentioned, the phase 1 is operational. We're producing flake. We have a schedule, I think it's 3 days, 2 nights. So it's a continuous operation of the flotation circuit to generate flake graphite. We've mined so far close to 30,000 tons of ore, and it's still ongoing in the upcoming months. Yeah.
Perfect. Question for Charles regarding our current cash balance. Are we fully funded to get to the FID?
So right now we exited Q2 with $32 million of cash on hand. And right now we are decreasing some of the activity which was related to the feasibility and the demonstration coating line that we recently announced the start of the commissioning. So right now we do have plenty of cash to go up to FID, depending on the time of that FID decision.
All right. 2 more questions regarding electrification. So status in terms of building the power line for the mine, and what's the interim plan in terms of the fleet for the Matawinie mine? We've set the objective of being fully electric by year 5 of commercial operations. So how are we going to manage the first 5 years?
Yeah, so as far as power to the line, to the mine, we're currently working with our supplier, Hydro-Québec, and all the plans are in place to make sure that power will be on site on time according to our current schedule to support the startup of the mine late 2024. And as far as the first few years of operation, so we're working in close collaboration with Caterpillar, whereas they will supply us with their very latest and most efficient diesel equipment to start operating, and in parallel with their prototype electric equipment. And as the electric equipment gets ready and fully ready to operate, we start phasing the diesel fleet out and replacing them with the electric equipment. So we're going to be the very first mine to go through this process, and we're very excited to be working with Caterpillar on that.
And on the battery material plant, are we considering bringing in a partner, an existing producer of anode, to help us advance the project?
We are open to all commercial discussion that would make sense to our customer and to our shareholders. However, you know, there's not many anode supplier outside of China, and it is clear that when you're an established anode supplier in Asia, you cannot just come in America and be very competitive if you're not working with a miner. So we are in a very good advantage point here by owning both the mine fully permitted, very close to a transformation site of very high quality. So this is a major advantage that we know, and we will. Yeah, the short answer: we are open for discussion, but we know our value.
All right, wonderful. So that wraps up the Q&A session. Thank you very much.